let's go ahead and wrap this up. Final trades. What are you guys recommending to investors as we head into the beginning of the new year? Let's start with you, Lynn.
So overall, I think being liquid is important here. Obviously, I've never been a huge fan of T-bills and treasuries. Generally been more on the inflation side. But I do think that holding, some short duration bonds, even long duration bonds for part of our portfolio, as well as tips. I think optionality is useful here. We never know when we could get one of those big correction quarters, a taper tantrum. And so overall, I have a long-term inflationary tilt, real assets. I like properties, I like energy, I like Bitcoin, I like many types of equities out there that I cover. There's a lot of assets that I like, and I own them, and I'm overweight them. But I'm doing that in the context of also having no leverage and plenty of liquidity, so that I can rebalance into any of these pockets that we get where we have a policy error or we have a growth scare, things like that. So I think anyone with like an inflationary or otherwise bullish outlook, I think has to temper that with realizations it's not going to be a straight line and to pay attention to some of these cycles.
Yeah. Mr. Supply Chain, you're up.
All right. Well, today is working against us because anytime there's a new variant or a growth slowdown, all shipping sells off. So today is definitely a buying day. Near term on the trading side of things, we still like Zim, ZIM, Zim Integrated Shipping. We estimate they have about $30 per share in cash on the balance sheet right now. And at the current freight rates, they're generating over $1 per share in free cash flow. So $30 in cash right now, about $1 per week. The stock trades at 55. They have no traditional debt, zero. So that's a very interesting setup. It's selling off today with the news of the variant and such like that. But initial reports, again, I'm not a medical expert or anything like that, but initial reports seem to suggest this won't be as severe as Delta was. If that's true, I think Zim's going to look really good for us. We'd expect to see freight rates at this point of the year, especially given the spike, we'd expect to see them down 40, 50%. Instead, we're seeing them down about 15%. So we think Zim's got legs. If we can keep rates elevated on freight, even just until Q1 or Q2 of 2022, the stock's basically paid for itself.
Yeah. Eric, what do you got for investors?
Yeah. So when growth is slowing, broadly, you want to get out of cyclical exposures and you want to get into duration. So if you're a multi-asset investor, the best expression of that would be your longest duration treasury bonds. That would be exposures like TLT and EDV. TLT will give you about 18-year duration. EDV closer to 25-year duration. Just to put some numbers on this, since that peak in growth in April, your longest duration treasury bonds over just the last 8 months are up over 20%. A lot of people don't realize that you can get that kind of return, both upside and downside in risk-free treasury bonds. So those are exposures that you'd want to add to your portfolio. And then if you're not a multi-asset investor and you focus more on the equity market, you'd want to be tilting towards your equity, your duration sensitive equity. So that would be like utilities, mega cap technologies, and things that you'd want to be underweight would be like Russell 2000, small caps, things like that, just to kind of, again, put some numbers on it. Since that inflection in April, long duration treasury bonds are up 20, 25%. Russell 2000 is down 2%. So you have a 25% spread between risk-free long duration treasury bonds and cyclical equity exposures. That trend and that performance spread will continue so long as growth continues to decelerate.
Brad, bring us home.
Yeah, so those are all great, some great advice there. I would say, sticking with my net lease overweight position. We talked last week about Vici, but I'll remind the audience again, Vici is one of our top picks. They're a subsector of net lease being the gaming sector, but really moving into the experiential sector. There's about 12% short positions in Vici right now. So obviously a little bit of pressure on Vici. But again, I think with the consolidation, the merger planned in the first quarter with MGM Growth Properties, that's ticker MGP, as well as the closing of the Venetian, which is one of the largest hotel convention centers in the world. I think there are plenty of catalysts to support some above average growth in AFFO, that's adjustable funds from operations in 2022. So I really like Vici. I think that's a name that we're sticking by, even though we've got some shorts going the other way. We think at the end of the day, when these deals close, There's very little execution risk. These are long-term net leases. So we're looking for Vici to have some strong performance in 2022.
Yeah. Just a reminder, everyone, this is Eric Basmachin from EPB Macro Research, Lynn Alden from Stockwaves, Brad Thomas from iRead on Alpha, and Jay Mintzmeyer from Values Investors Edge. All of their services are on Seeking Alpha Marketplace. You can check it out, and we'll see you next week.